Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's May 23rd. And I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. Man, crazy week for me. As you know, we're launching our new crypto newsletter. It's called Crypto Intelligence, just a few weeks. A lot of preparation for that. It's being run by Barry Cohen. He's been on this podcast plenty of times, who I call the smartest analyst in crypto by a mile. And by the way, he hates when I say that. You think about it, it's kind of refreshing. We live in a world where everyone needs to take selfies and post on Facebook and show you where you are. And I'm here and there on vacation, all this stuff. I'm having fun and you're not. Look at me. You have billionaire hedge fund managers that used to be, you never heard of these guys before. You just heard of their names. Now they're on TV everywhere. They're dying to show their face every place. And, the media bug. Look at our the financial newsletter industry. I mean, it doesn't get better than that. I just love talking about how great they are all the time and all these winners and stuff like that. When it comes to Barry, despite working in the hedge fund industry for over 20 years, working alongside several of those billionaires, billionaire fund managers, whose names you definitely know, and despite generating about $500 million for clients at these funds over his career, he's a humble person. I get to know him personally the past few months. He's just a great guy. Spends probably all his free time with his son, cares about his reputation. That's why you'll almost never hear Barry speak of the upside potential of a cryptocurrency or crypto-related investment without him clearly highlighting the risks. And it's awesome having worked for Curzio Research. And sometimes I look at guys like Alkin, Michael Alkin and Barry, and I got to pinch myself. You look at guys that could work for any shop, right? They could easily get a job at almost any hedge fund since they've been in that industry their entire career. Again, both of them spent over 20 years in that industry. Unbelievable. It's really an honor to have people like this who exceptional analysts, have great track records, but the most important thing is they care. They care about the audience. They're mad if they have bad picks. And that audience happens to be, mom and pop investors all the way up to major institutions and fund managers. And that's a big deal for me to hire analysts at Curzio Research. I mean, you have to care. You have to love what you do. If you don't, I don't care how smart you are. It just doesn't, it's not going to go well. If you don't care, if you're not pissed off when you have losers and understand the responsibility that you have of being a newsletter writer where people are taking their hard-earned money and investing them in ideas. And when you're wrong, it's painful. I hate it. I know these guys do too. They really care. They care about that product, integrity. Just awesome. I'm really excited to launch this product because you're looking at the crypto world these days and there's so much BS. And having Barry, you need someone that knows this industry, can break down companies from scratch, which he used to do, tear apart companies and financials. Help you navigate through this crazy industry. Of course, the newsletter is going to come with plenty of recommendations, but what's great, and the reason why I'm so busy this week, is Barry's here, and we're taping a lot of educational material to subscribers using the technology that we have on our Curzio Research Facebook page. Not only will you see Barry, which I don't know if it's a good thing or bad thing, you can let me know about that, but he's going to be able to show you the screens and showing exactly what websites to go to set up an account, right? I mean, if you're in a crypto land, again, that's kind of basic to you. How to fund these accounts, what you need to look for, what brokerage, crypto brokers, house you need to avoid. And all this stuff's going to be shown to you through educational videos and numerous ones. And I want to continue to tape those because this industry is fascinating. And it's incredible. I've been talking to Barry a few times a week for over the past, 4 or 5 months at least. And I learned something new about this space almost every time we're on the phone. It truly is fascinating. Not only is it fascinating, it's risky. And it's funny because I got a question from a subscriber this week. I thought it was a fantastic question. I'm going to share it with you. I'm not going to share the name. Great guy, has been a subscriber for a long time, follow a long time. And he asked me this. He goes, Frank, I'm a fan and a lifetime subscriber to 2 of your newsletters. I subscribe to Alkins as well. But on the new crypto, I'm not all convinced. Maybe blockchain will change the world. I don't know. But in all the talk, included talk on your own podcast, I don't hear value. I hear momentum. I hear growing trend. I hear about all the enthusiasm. I hear about the big boys piling in. I hear about how it's global. I hear about chart predictions, what cryptocurrencies will be in 10 years. In short, I hear hype. What I don't hear is value. What can people or companies or banks or whoever do with blockchain or in a foreseeable future that is a game changer? Maybe I'm missing it. Cheapest supply chain management? Data security? I don't know. Do you? Does anyone? It sure as hell isn't a currency. There's no currency that loses 50% of its value in 6 months, maybe except in Zimbabwe. There's iPhone, DNA-driven medicine, AI, big data, IoT. On any of those, I can name realistic, current world use case scenarios that show clear, even revolutionary value. Where is that for blockchain? Decentralized financial system? Sounds like an ideology, not a business plan. I thought that was great. And I responded to this person telling him, listen, you always have to be skeptical of every investment you make. I'm skeptical of the crypto industry. I'm skeptical of a lot of industries that I invest in. It's why I spent countless hours learning every corner of these businesses. I try to talk to my best sources. I attend conferences. I visit sites all over the world. Like visiting that data mining cryptocurrency site is amazing. Like understanding how these computers work and all these servers and seeing in real time where these people are actually generating Bitcoin and mining for Bitcoin as I was there, fully operational, telling me about the costs I have to worry about it and how important they are. And actually, since they're in operation, giving me the break-even cost, which I think was somewhere around $1,200 to $1,500, maybe a little bit higher than that. Don't quote me on that. Which is incredible because when you see Bitcoin fall from 19,000 to 8,000 and people get on CNBC and say the average cost for these data miners are like 7,500. So once it goes below that, they're not making money. Well, it's not true for everyone. And when I see this company paying 2.5 cents per kilowatt for electricity, which is, I mean, how much lower? You're looking at, I'd say 5, 6 cents, 7 cents average cost around there, maybe 6.5. And you know you have a good company on your hands. And I know that because it's my job to get out there in the field, to do the research, to do the homework. And it's your job as well. Like, always be skeptical of every investment. When it comes to this technology, for me, there's a real need for it. I mean, every Fortune 500 company has been hacked over the past 10 years. Anyone that tells you different is lying to you. They're hiding it. Hey, blockchain can't be hacked. More important, this technology eliminates the need for financial companies. I mean, it could. If you think about it. I mean, you're looking at financial institutions, banks, investment firms, credit institutions. What are they? Most of them are just middlemen. I mean, you have to have your bank in a bank account and, say you don't have over the limit of whatever, 10,000, whatever it is now. They charge you to keep your money in a bank. They charge you. You want to do wire transfers, which I do when I invest in a lot of different things. They just charge you. They continue to charge you just for being a middleman. It's not even like a big service, really, to press a button, transfer money to someplace else. I got to get charged for that. I mean, that really costs you something. But they charge you massive fees for these things. With blockchain, you no longer need a bank account. I mean, think about how important that is. Okay, now you're in the U.S., you're saying, always going to have a bank account, and honestly, I'm always going to have a bank account. But think about globally, transferring money, digital or wire transfers to a family member in the middle of Africa or in the Middle East without the need of having a bank account, which, look, a lot of families in undeveloped countries do not have. That's a serious need. This is technology that's giving access to the little guy. The access that may only be available to people who have $10 million in an account at Goldman or JP Morgan. You can invest directly in the things that they're investing in. They're going to let you know, hey, we got a good idea. Here it is. You look at those good ideas and in the form of IPOs or whatever, and how crazy that market is. I mean, I don't know if you guys are familiar with the IPO market, what happens behind the scenes. And the underwriters make a fortune. They make a fortune on this. And say if we start growing tremendously and Curzio Research is like, on the map, is $1 billion company and I want to take it public, you have to go to these firms. And you know what? In order for them to get to back it, raise cash, they're going to require that I pay 6% of whatever they raise. So if it's whatever it is, say if it's $100 million, okay, here you go, 6%. And not only that, they're probably going to ask, it's called 6 and 6, probably about 6% of the stock as well they're going to want. I mean, that's a massive, massive fee. That's automatic dilution to anyone who's investing in our stock through this offering. Now you have a cryptocurrency exchange where you can have tokens that allow investors to trade these securities immediately without having to wait. What's the wait period? The wait period is around 6 years on average if you invest in a private company. What does that mean? Say if you put $25,000 into a private company, the time you're able to cash out if the company does well, which is a very, very low percentage. That's why, you put your money in venture capitalists sometimes where they could screen a lot of these deals and make sure they get amazing deals for you. If you look at the average time, it's 6 years before you'll see an IPO, and probably even longer. I mean, this is stats I looked at a year ago or two, but now it's the private market. They just keep, Uber keeps getting more money and more money. And how much money did Facebook get through all those years? Alibaba. I mean, these companies, 90%, 80% of their growth is gone by the time they come public in an IPO. And the amount of fees that are generated just from these companies bringing them public is incredible. But during that period, it's very difficult. You have to see an IPO or get acquired unless, you could probably get bought out maybe, but your securities are liquid if it's private. So it takes a long time. You have your money locked up. It's like going in real estate that you paid, you overpaid for and it's in a bad neighborhood, just keeps going lower. What are you going to do? You can't really sell it. Your money's locked up and you can't take it out. It's a liquid. Now look at the cryptocurrency market. Man, and look at the amount of money being raised. I would say 90%, Barry would probably tell you as well, 90% of these companies, you got to be careful of. But say if Curzio Research decides to go that route and launches its own token, that's pretty cool. Now, anyone investing in that, and I could say, okay, it's available to accredited investors only. I could register with the SEC. You have asset-backed tokens now all the time, right? And maybe the lockup period is a year. Now you could trade your investment after a year. And not only that, your investment is going directly into the company, especially if I was to offer equity. Right? So now it's not like, okay, you're taking 6% of whatever money you're given and you have to give that to the investment firm. I mean, that's huge. We could do that now with networking capabilities and having the access to the right people and the right sources. A lot of this is available through cryptocurrencies, through blockchain. I mean, it seriously is a game changer. If you look at every major financial company, there's a reason why they're investing in this trend. I mean, it threatens the foundation these companies were built on. I've said that numerous times. And you look at the conference in New York City last week. Barry did a great job talking about it because he went to the one in Miami, which is kind of a shit show. Girls in bikinis, Lamborghinis, all the stuff, all these kids running around like they're, rich and stuff like that. Remember, credit card is a lot higher. This one was institutions and major companies using blockchain. FedEx, JP Morgan was there. I mean, numerous companies I mentioned last week, dozens and dozens of major companies, every exchange. And this is something that makes a lot of sense. It's going to be cheaper. It levels the playing field. The possibilities are endless. If you look at the small cap market, I truly believe the small cap market is going to be transformed over the next 10 years, where companies are going to choose to come market via ICO, which is kind of getting changed now, which is an initial coin offering, to STO, security-backed tokens, or security-backed offerings, where companies will offer an equity stake and not have to worry about hiring these investment firms. Again, you look at, from my view, in the research industry, in investment, and someone who's covered small caps, and I cover all the industries, but again, I've been covering small caps for a very, very long time. There's investment firms that are not going to cover even the best small cap companies if they don't think that they could generate investment fees from them. It's a fact. That's how they make their business. They make their money. There's a company I'm recommending in just going out today to Curzio Venture Opportunity subscribers. Zero analyst coverage. Zero analyst coverage. You know why? Because they have a good balance sheet. It's not a company that's going to acquire anything. More of an asset play that has tremendous upside value. But they'll never get coverage. Why? Because no one's just going to cover it because they say, wow, I like the CEO and that's a good company and maybe people can make money on it. No, I can't generate investment fees off of it. I mean, even in the investment world, what's the rule now? Isn't it like 10%, at least minimum 10 to 15%? So if Goldman Sachs recommends 100 stocks, I think there's an actual percentage on them that have to be sell ratings now. So even if Goldman Sachs or JP Morgan believe that 100% of their stocks are buys, they have to, because of the rules, put sell ratings on certain stocks. Think about that for a minute. Is that in your best interest? And even with that, in market collapses, you will never, ever see firms, big firms, again, they're covering these stocks for investment fee purposes. You're not going to see a lot of them have like 30, 40% of the stocks they cover and have sell ratings. Because if Curzio Research is a public company, I have 10 analysts out there and I need to raise money, I'm not going to go to the guys that sell ratings on me. I'm going to go to the guys that buy ratings on me, right? Doesn't that make sense? Oh, hey, yeah, I know you hate our stock and think it's going to crash, but you want to be part of this offering? I mean, obviously going to say no. They think my stock's going to go lower, but you're going to go to the people that have the buy ratings on you. Why? Because they're going to push it after these offerings because they have their clients in it. That's the game. This is a game changer when it comes to blockchain, when it comes to cryptocurrency. I see the entire small cap market really turning to this industry. I mean, not the entire, but a lot of small cap companies going public this way. It makes sense. And Spotify did something unique as well with their offering. You're seeing major changes. But when it comes to crypto companies, be skeptical. There's a lot of hype around things. Educate yourself on this trend. Watch TED Talks on YouTube. You're going to get familiar with guys that really know their stuff. And that's why they hate when they see these, garbage promotions out there. Or all of a sudden, a guy that knows basically nothing about the market, about this industry, is all of a sudden an expert in it. And someone who called for Bitcoin to go to zero now all of a sudden, because he can sell newsletters, believes it's going to go through the roof. Hey, that's why a lot of these guys hate our industry. If you go in and you watch some of these guys, you find out which ones are cool. You can read some of their books. A lot of these guys are pitching books. You can go to their website and find critics, right? You always want to hear the other side of every story. That's what investing is about. You don't want to invest in something that 100 people love the thing, but that's why I don't like Apple right now. I don't know a person who doesn't like Apple. There's 43 analysts covering the stock on Apple. Not one sell rating, yet almost every one of those analysts significantly lowered their estimates on Apple going into the quarter so they could beat. Warren Buffett, I wish I could buy the whole company. Gates, I don't know anyone that doesn't like Apple. And it's sentiment so high for a company that how many companies do you know, seriously, this earnings season that lowered, after tax reforms, that lowered their earnings, or analysts lowered their earnings heading into this quarter? You're not going to find a lot. Especially on the top 100 companies in the world, the S&P 500. Believe me, I cover this stuff. Yet the number one biggest company in the world, analysts lowered their estimates significantly. Pretty interesting. Anyway, let's get on an Apple thing there. But for me, being in this industry, guys, and the financial industry, what I love about it is I'm always learning things that are new. And from someone who spent their career spotting new trends, and I pride myself on this, before the masses, being able to see markets turn. And I've not always been right on my investment decisions. Sometimes I pick the wrong stocks, been right on my market calls. But how do I do that? Attending the CES for 7 years, Consumer Electronics Show. You're telling about big data, cloud computing, shale oil, big data analytics, AI, talking about 3 years ago, augmented reality, immunotherapy, like 4 or 5 years ago. I mean, just having a network that's incredible that educated me on this stuff and being able to bring this to you before these stories are going on CNBC and Wall Street Journal and all this stuff. Yeah, I take a lot of pride in that. They try to get ahead of the trend. That's how you make the most money. But from someone that does that, when I look at blockchain and cryptocurrencies and then crypto market, it's one of those fascinating trends I ever researched. I'm a 100% believer that this is going to be a game changer. It's going to disrupt numerous industries. We're seeing it do it as well. Real estate, insurance, financials, especially when it comes to capital raising. You look at the SEC rushing to regulate it, working with companies who are real, saying, okay, here's what you have to do. And because these are securities. And if they're not listed as securities, then you're going to see these capital raises outside of the U.S. But the U.S. is losing massive market share because it's setting up hubs in other countries outside of the U.S. where they have a little bit of regulation there and saying, hey, these are coming like mini Silicon Valleys. So once you get regulation, which we want to see, right? You want to see the market regulate. You want people to be protective. Forget about if you're libertarian or whatever and believe no God. You want to be protected. You want to make sure that you're investing in things that if it's a fraud, you're going to get your money back or you're going to be able to sue people. There's got to be, some kind of protection there. And that's why the SEC is in a rush to regulate this industry. And once they do, you're going to see even more money pile in because why? As you know, when it comes to stocks, people and investors, they hate uncertainty. They don't know what the rules are going to be. But once the rules are set, now you can say, okay, hey, I'm a small cap company. I don't really want to go the IPO route. I like to raise money. I'd like to give away an equity offering and have my token, maybe it's only offered to credit investors and have my token trade 12 months from now. That's a pretty cool deal compared to investing in a private company, being locked up for how many years, and then you find out the investment does, maybe things go bad 3-4 years from now. That's the most important thing, being able to be liquid with your investments, because if you're investing in 4, 5, 6, 7, 10 private companies, you have a lot of money locked up for a long time. So I look at this industry, I'm a believer in it. I'm skeptical as well. But the things I'm finding and learning stuff from Barry as well, who's just 100% focused on this industry, it really is fascinating. It's really cool. I think people can make a lot of money in it, but people could also lose a lot of money if they're investing in the wrong thing. So for me, I'm proud to have Barry on board, have him help me navigate through this incredible market, which I believe is comparable to the internet in the 1990s, where it's still very, very early. I don't think we've seen like the Amazons, the Priceline.coms, the eBays, and Netflix. We haven't even seen those companies come out yet, just like with the internet, right? They didn't exist as soon as the internet was. No, it took a long time. It took just amazing CEOs, visionaries, to say, wow, look what we could use the internet for, and here's why it's going to make a difference. And now look at those companies. I mean, investing in those companies just over 15 years, 20 years, and imagine just putting $5,000 into some of those things. It's pretty incredible. So anyway, going to be launching Crypto Intelligence in a few weeks. Put a great price point on it where it's cheaper than most crypto products out there, much cheaper than our highest end products, which are Curzio Venture Opportunity and Mike Alkin's Running Full Trader newsletters. So we lowered the price point to where we could have a lot of people, and will have a lot of people, have access to Barry. And that's what we want. We want people to look at his research, get educated on this industry. Because in the end, look, sounds cheesy, but our job is to make you money. We're trying to make you money. And to do that, we want you to have access to the best research, the best newsletter, and that's why we're launching this. That's why we didn't launch it 4 or 5 months ago in the middle of all the hype and everything, all the craziness. And Barry's really cool. He told you in December that he expects Bitcoin to fall, a lot of regulation to be talked about in the industry. And it fell, and now he's investing and seeing some really good ideas. So I hope that translates into great ideas for you guys, where you guys can make a lot of money. And more important, educate you on this industry, which is in its infancy and still very difficult, very, very difficult to understand. But that's our goal. Educate you, try to make money, and put an analyst in front of you that's the smartest in this entire industry. Now, have a great interview set up for you. It's with Marin Katusa, a guest I know you're familiar with. It's been a little over a month since the last time he came on the show. As you know, I usually have a rotation of your favorite guests, which include people like Marin, John Petrides, Andrew Horowitz, Rich Sutmeyer, Steve Kumar. I like to have these guys in rotation, have them on once a quarter, get their ideas, updates on markets and stuff like that. So why am I having Marin on again so soon? Because the last time he was on, he told you to buy a company called Nevsun. A few weeks later, receive a takeover offer, make you a lot of money if you listen to him. A few months before that, Marin's on the podcast. He gave you Altera Power, won by superstar billionaire Ross Beatty. And that company was also acquired. When it comes to investing, it's kind of like sports. You get hot and you're not hot. Right now, Marin's pretty hot. It's almost like Steph Curry hitting every single shot he takes. What are you going to do? Well, you got to keep giving the ball. Aaron Judge batted 400, hitting home runs like crazy. Well, you want to make sure the guys in front of him get on base, even if they have to walk, right? You want to play into that. So that was a red hot. Give you great ideas on this podcast. And you know what? Today he's going to share some more of his favorite ideas. So he's going to talk about the state of gold, which he's actually quite bearish on. Just going to give you one of the commodity that looks incredibly attractive, and that's one he hasn't invested in over 10 years. So you know what? Let's get to that interview right now. Marin Katusa, thanks again for coming on my podcast.
Always a pleasure, buddy.
Well, I'm going to get direct with you, right? Because everybody knows you, and we're going to get to the picks that you had because you did very well, especially the last couple of times you were on there picking two companies that got acquired. One got acquired, one got an offer to be acquired. But I want to start with gold because I'm getting a lot of questions on this. And my question to you is, what is going to move gold higher? Considering, for me, I truly have no idea. Since gold, if you look since 2012, we had the dollar pushing sharply lower since then, and now the dollar is surging. Really didn't impact gold too much. Interest rates were at 0 in 2012. Now they're moving higher. Again, we're not seeing anything within gold or interest in gold. Inflation was super low, barely over 1%. Now it's over 2% and rising. A lot of people expect inflation. Interest rates going higher too. Gold is not moving. So, and we also had what in the past, man, with Brexit, a new president that should have created tons of certainty, tariff scares. I mean, events that sometimes can make gold a good place for safe haven investors, or if investors looking for a safe haven. All these conditions that we've seen over the past 4 or 5 years, yet I'm not seeing gold move anywhere. What makes you think it's going to go higher from here? If you think it's going to go higher from here.
I don't. And, as I've been writing, in the near term, it has been moving down, right? And this is what I've been trying to write for many months. And, you always write as an annual outlook issue. I said, look, U.S. dollar, and this is funny, Frank, I got more hate mail about my U.S. dollar opinion than anything else, and that tells me that I'm on the right side of the trade. And I said, look, the U.S. dollar is going to do well this year. Gold and most commodities are going to have pressure on them. So what is it, to answer your question, in the near term, so within 6 months, is going to get gold to go a lot higher? Nothing, other than some black swan that no one expected. Couple of reasons. On a production side, the supply is meeting demand. But then let's take it a little deeper here. So you look at what's going on globally. So if I'm right on my thesis that the U.S. dollar will do better relative to other currencies, in the emerging markets, things like, let's take Venezuela and Iran for an example. Those who switched out of their currencies and held gold, that saved them, okay, because of the inflation. But if you look at other parts of the world, we're kind of in a deflationary environment. Software is eating the world. Things are technically getting cheaper. Now, yes, there's subsectors like art or real estate in certain pockets. But from a gold perspective, there is a whole sector of the market, whether you want to call them the libertarians or the Doug Casey's crew, but they were historically would speculate in gold or gold equities. Bitcoin took a lot of that excitement out. The legalization of marijuana also took a lot of that speculation in gold out of the market. And I know it sounds crazy, like how would marijuana and Bitcoin take money out of the gold market or the junior mining market? But it's completely true, because there's that mindset of the people who are looking for explosive growth, unconventional, speculative or investment ideas. And that's what we're seeing. So in the near term, you see gold having pressure. If the U.S. dollar goes higher, the emerging markets are going to struggle, which means commodities will go lower. And, with what's going on with China, the G2 between China and America, the world's kind of doing well. Like if you go to Vegas or if you go to Tokyo, look at the tourism of Japan. It's booming. The economies are doing well. Yet, you would think if you opened a paper 5 years ago and read what's going on in the world today, gold would be $2,000-$3,000 an ounce, but it's not. So you have to kind of look at yourself and go, okay, what's going on? And you look at the markets for the gold. You look at the ETFs, and there's all these derivative markets on gold. And frankly, the junior mining is a derivative on the price of gold, right? Whether people understand that or not. So in the longer term, I'm much like in a year and a half, I'm very bullish on gold because it's a great place to be. But you can still make money in this sector because it's so cyclical. And, you know, the last pick I gave on your audience is a perfect example of a story that made a world-class discovery, and it was by my buddy. I was one of the first guys to finance it 12 years ago, you know, and these stories in mining, they don't just run away from you and they're gone forever. They always come back, and you can make a big score on these stories if your research and your fundamental concept is right, your thesis. But then you got to pick your timing as another aspect, and then how much do you bet? You know, there's all these different factors. So that's pretty much my answer in the near term. And then the only other thing I'd add is a lot of my good friends in the industry are now starting to talk about peak gold. And unfortunately, I think they're wrong. You know, the reason we're not exploring, you know, basically the thesis is that's it, we found all the big gold deposits. I disagree with that. Before we found all the big gold deposits, we have to start mining all of the big gold deposits. You know, you look at Pebble or KSM, there's so many of these big, massive gold deposits that are there, and they're not put into production yet because the market can't absorb it, right? So the price of gold is going to stay at its, you know, it's the swing producer cost base. So I can get into real details why, you know, my good friend Ian Telfer, who's the chairman of Goldcorp, you know, his big thesis that we're peak gold. 12 years ago, you know, when Matt Simmons came up with the whole concept of peak oil, again, I debated all the big names in the industry. I said, you guys are wrong. Technology is going to come in. People just laughed at me and called me this young kind of optimist. Well, then fracking came in, right? And fracking changed the world. You know, and mining, Frank, is like 25, 30 years behind the energy sector when it comes to technology. So do I believe in peak gold? No. Do I believe that the peak government red tape? Yes. You know, the governments have to change and adapt to, you know, using science rather than misconception of the NGOs. But, you know, it's all this combined is the reason why gold's under 1,300.
So you brought up a lot of interesting points there, Marin. I mean, what will change? Because remember the peak oil stories, right? And for me, I always laughed at that because I said if oil prices were $300 a barrel, they could always drill vertically down. Forget about horizontal. They could drill further and further down as prices went higher to areas that they didn't tap. Like you said, I think we could explore tons of gold if the price is right. So does that mean it's going to take maybe prices to go lower, more companies to come off the market? Because even the junior space, I mean, there's thousands of these companies, right? But even when it comes to the majors, I mean, do we have to see a little disruption there? Do we have to see like a further reckoning in the industry where it's like a complete, what we call, and I know you know this term, like puking stage, where everyone just completely gives up of it, it's gone. You're seeing companies get wiped out, and that usually provides a bottom where, you know, it seems like a lot of people thought the bottom was in, especially this year, last year. But, you know, what could change that? I mean, is this a change that can't happen quickly, that could take 5 years, or you know, what's your opinion on that?
So specifically what I wrote about a year ago is we have to be in a consolidation, like before gold gets to 2,000 and copper gets to $5, and you know where we're going in the market, we have to see consolidation. Because first of all, let's take the juniors. Yeah, there's 2,000 junior mining companies, but less than 100 actually have a decent exploration program with drilling. A lot of these guys are just sitting there, you know, they're essentially shells. And what I mean by that is, yeah, they have a company, they're maintaining their projects, but they're not doing anything. They're not growing. They're not, you know, they're not a good investment, right? Or speculation. They're just there. They're run by rounders. These are guys that I call, they're just always hanging around. They don't really add any value. But if you pick assets that are now thrown out with the bathwater because the sector is so cheap, which it is, and you start picking like what I did with Nevsun or Altera, and you start building a big position in these slowly through tranches, the sector is going to consolidate because look, there's a lot of smart people in the industry. There's some great companies that are growing production. And they realize that, wait a second, it's a lot cheaper to go and buy out someone else's world-class project that they've risked and drilled out than it is for us to go and try to find our own. So before the industry goes and finds its own, it has to consolidate and digest all of these world-class assets that are in these underfinanced juniors and mid-tiers. And that's where I'm positioning my big money, is where in the market can I pick up incredible value at, 10, 15, 25 cents on the dollar and expect nice buyouts. And it's happening, Frank. But nobody's really talking about it because you gotta kind of know what you're doing. It's not a really sexy promotional thing, but it's how you get doubles and triples. So this market, like, look, you and I were the first guys in the Northern Dynasty story. We made over 10 times our money. Unfortunately, in this market, I'm going for doubles and triples because I don't think we're at that 10-bagger level right now. Look, it could happen, but I'm very happy doing doubles and triples. And that's when you get in the consolidation phase of the market.
And I hear you. And I guess real quick, too, because I got a question on Northern Dynasty, and we know that management team very well. Great people who have fought off the shorts on that company. We've seen so much news about the EPA, and then they got that EPA lifted. Now it's kind of like coming back. I mean, from someone who knows that story well, and I know, we talk to management and stuff like that, and it's already tough enough to invest in an industry that's just, nobody's really interested right now. No institutions are interested in it. It's being bashed, and now you have the EPA thing coming back. But it's reflected in the price of NAK. I mean, I told people that there might be value elsewhere, but I guess, from someone who also knows this story, maybe if you want to give your opinion on that.
Look, for the asset, and it's funny, one of these deposits have so many armchair, I call it the peanut gallery, guys who've never been to site, guys who've actually never built the mine or know what it takes to build a mine or finance a mine or be part of a team that is a producer. It seems the Pebble project, which is 100% owned by Northern Dynasty, seen so much negative attention to it. And I guess when you have such a big asset, everyone throws darts at you. But the irony is when you look at First Quantum or Rio Tinto or Anglo, these are not stupid companies. They're the biggest for a reason. And they've done their due diligence. And I do expect First Quantum to fully earn in on their option. That's just my own speculation because I know the company. Hell, I financed the Panama project before they bought it because I figured this is a world-class asset. Someone's going to buy it. Boom, they bought out Inmet, which bought out Petakia. So you if you can put yourself in the mindset of what a major needs, and by understanding what growth, you can kind of become your own mini investment banker by finding these assets and doing it. And eventually, look, I don't know when Northern Dynasty or Pebble will be in production, but it will be in production. And science will prove and time will prove, just like when you go up to Highland Valley, one of the biggest open pit mines in North America, or the Butte mine, actually it improves the environment and improves the community. And people go, what the hell are you talking about? How could a mine improve the environment? Well, actually it does. So you reinvest into the rivers. You reinvest in the reclamation, just like in the oil sands up north in Alberta. Companies are investing hundreds of millions of dollars back into the environment. And yes, it's not perfect. There's going to be accidents, but you're on top of it. And the industry, the North American industry, is a leader. And people laugh at me when they say, wait a second, how could it improve fishing? Well, you look at right now in Alaska, they're getting like 30 cents on the dollar of what the British Columbian processors are getting because the ice is more expensive, than just shipping it down. So for them, they have no power. Power is so expensive up there. Well, you bring in a major mine, and now you start talking about the derivative effects of the industry. So it may be 5 years, it may be 15 years. I have no idea. And it's, for us, Frank, when we got into it, I love going into a story that everybody has written off. You do your thing, you make a major investment, and that was a great score. I'm still very close with the Northern Dynasty management. I still own a Katusa free ride position, just like I told all my subscribers, take all your initial investment and a big tidy profit off the table. But right now I see easier money in the market than the Northern Dynasty story.
No, and I appreciate that update too, because it's a story that we follow, and again, we know management and really good people. So I want to transition here a little bit because the last couple of times you're on the podcast, I think it's 2 of the last 3 times, and the reason why I'm having you, I usually like to have you on like every quarter. I have a list of guests, but I'm having you on a little bit sooner than that because 2 picks that you've given us the last 3 times. The first one was Altera. A company that we went to go visit, Ross Beatty, amazing. Went to go see his hydro plants in Vancouver and took a helicopter there with him. And I don't know if you remember this, Marin, but just you and I was sitting in the helicopter with him, and we were just like hitting him with questions. And it wasn't like questions about the company. It was like success. What do you need? And he was just telling us things. I'm not too sure if you remember saying, look, if you got to take chances, if you're going to take chances, make sure that you're going to get paid because a lot of times people take chances and give away so much. And even when they're right, they don't benefit. So many other people benefit. But what an amazing story. Anyway, I didn't want to get too much into Altera, but there was another company you recently recommended not too long ago, less than a month ago, Nevsun, which received they didn't acquire yet, but received an offer, and the stock went much higher. So I guess could you update us maybe on those 2 positions? Maybe tell us a little bit more about Altera, Ross Beatty, since you're good friends with him, and also Nevsun.
So Altera was the largest pure green energy producer in Canada. This is a story that, because of your podcast, everyone went, oh my God, within a month of going on your show, it got bought out. It was an overnight success that took me 9 years to get to. And let me explain why it took almost a decade. In 2008, I was on the site visit to Soda Lake, which was a small sub 20 megawatt producer in the U.S. for geothermals when Ross Beatty started getting into the green energy game. And after Obama won in late 2008, 2009 was the green energy revolution. These stocks went on a tear, and Ross's company called Magma Energy at the time had about a $4.50 share price. And, I just kind of thought to myself, sorry, it was $2.50. So it was equivalent because of the rollback. It was $25 equivalent share price. And I was at a conference back then at the Casey conference, and I was the energy moderator of a panel with Rick Rule and Ross Beatty and Doug Casey and Lucas Lundeen, and everyone was just talking about green energy. And Rick's company called Ram Power was $4.50 at the time. And, you ask them the question, they're knocking out of the park, they're there to promote. And someone in the audience goes, well, Marin, you're the mathematician of the group. What's your take? And I just said, look, guys, these are billionaires on the table, so take my opinion for what it's worth. But I think they're priced to perfection, and you're going to see them go down at least 50 or 75%. I just don't know when. And at that time, I'd be very, very interested. Well, I can assure you that I wasn't popular with Rick or Ross after that. So anyways, that was 2009. I kept watching the financials. In October of 2014, I rung up Ross, and I said, hey, I got something to show you. So we got together at his favorite coffee shop, and I showed him 20 pages of math, and I showed him, look, I want to become the second largest shareholder of Altera. Do you want to do a financing? And he's like, nope, we don't need money. I said, okay. He goes, good luck trying to find the market. No one's a seller. It's too cheap. Well, by 2016, so 2 years of just sitting there and soaking up stock, I became the second largest shareholder in the company after himself. He was the chairman. He owned 35% of the company. So going back to your comment, this is a guy who has serious skin in the game. And when he says try to own as much of a company as you can, if you look at all of the companies he's involved with, he's always the largest shareholder. So, I went on the site visit to Iceland, met with the central bank, tried to understand all the different things. And you wouldn't believe the misunderstanding, the fatigue in the market, Frank. It's I have this theory called the boom, the bust, and then the echo. I make a lot of money just investing in things in the echo. Remember, Northern Dynasty was a $20 stock, and you and I picked it up under 45 cents. That was the echo phase. And then within 12 months, it went to $4.50. Well, Altera, I got involved after the boom, after the bust, and during the echo. And no one really gives a shit about a company during the echo because that's when they're really doing projects, they're building. It's kind of that slow, all the excitement's there. Now they're actually doing what they said they would do from a few years ago, and people get bored of it. In fact, Bloomberg, which, I pay a lot of money to get their terminal, I sent them data going, hey, you actually got their financials wrong, and let me explain why. And I would organize all these analyst trips for me and Ross to go into a whole brokerage firm. Like we would go, whether it's the big guys in Canada, and we'd sit there and pitch the company. And then the manager, the president of the brokerage firm was like, why is Marin here? And Ross would go, well, Marin actually knows more about the details than I do. And that's a fact. That's what he said because I was so into it and I put so much money into it. Interjex bought it out for $8.25. Remember, our average cost base was under $4. And Intergex is a much bigger company. Essentially, they have a lower cost of capital because they're backed by two of the large French provincial pension groups. That did well. Intergex is doing well. It's digesting the company. We've taken all our profit off the table, and I am no longer a shareholder of Intergex, just like I've told in my subscribers. So that was a great win. With Nevsun, very similar story, and this will blow your mind, Frank, about the echo concept that I have. In 2009, Miles Thompson, who's the chairman of Reservoir, is a very, this is in 2008. He's a very close friend of mine. I financed his company. I remember I've got Slavic roots, spent a lot of time there. I'm fluent in Serbian. And we go to the project, and it was wild. Like, no one gave a shit about mining. And yet the history of this area, the Trepča complex, was a massive GDP grower for Tito during the Yugoslavia times. You know, you look at the Bor mine, one of the world's largest operations that has a smelter there. But in North America, everyone's like, what? Yugoslavia, Serbia, what the hell? Isn't there a civil war there? It's just misunderstood. So remember, 2009 was the green energy revolution, so Miles picked up a bunch of run-of-river projects in the Balkans. You know, very great potential there. Actually, historically, the first ever run-of-river project was actually in the Balkans, not Niagara Falls, but it was just outside of Split in the Dalmatian coast. But anyways, going back to this, in 2009, Miles vacations at my place in Europe. I've got a nice waterfront place there. So 2008, he's there. 2009, he goes, Marin, I just got orders from my larger shareholders and the board to get rid of our mining stuff. And I go, me and you should buy it. This is like, there's world-class stuff in this district. We just don't know where it is, but we will. And he's like, I know, I agree. What should we do? So I literally spent 2 weeks with Miles phoning up every one of my Rolodex, okay? And there's a major player in the industry. He could have bought, remember in 2009, it was a really tough time now. I was heavily involved in my deals, and $1 million was what someone could have owned the whole district package of what Reservoir had. Now, there wasn't a discovery yet. Anyways, Nevsun bought out Reservoir after they made the discovery in 2013. Oh, sorry, they bought them out in 2016, but they made the discovery in 2012, proved up more holes in 2013. But think about this. That asset today is worth over $1 billion. In 2009, we had many meetings, no one was willing to pay $1 million for it. So Miles and I said, screw it, let's finance it ourselves. So think about that, Frank. So what? Within 5 years, 6 years, it goes from $1 million to $1 billion. Then it got acquired. Then the acquirer got chopped in, a third in the overall market cap. So the combined of the two companies was now less than what the previous company was worth. So that's the echo. And that's when I started building up my big position. And so I wrote it up first in June of 2017. And just during, like October, November, it was $2.70, $2.50. You could have just bought it cheaper and cheaper. And we just sit there and soak this up. Then about a month ago, they got or maybe 3 weeks ago, they got a unsolicited bid offer to buy it out from a consortium group. So that's that echo concept, and people believe that there's going to be a counter offer. I believe there probably will be a counter offer, but I sent out a note to my people and said, hey, it doesn't really matter. Take a Katusa free ride. Whatever happens now is great. It's bonus, but it's all about preserving your capital. The key to speculation, Frank, is to keep your float, because opportunities will always happen, and you got to be an alligator, and an alligator buys during the echo. So that's kind of where I position my portfolio right now. I have two other stocks that I believe are going to be bought out by year end, and in this market. Now, it's not like one of these things like, when it goes down, like I'm buying millions of shares right now in the open market at the price. Like, this is the beauty of it. Everybody is just thrown in the towel, but you can buy great assets at lower prices than what the management bought their own stock in. Like, think about that. Like, that's the ultimate echo concept. Like, the share price of the company is cheaper than what the insiders who are running it, who bought 5 or 10% of the company. Like, that's how you make a fortune in the resource market.
But Marin, and with your echo concept, I mean, when you're looking at an industry that, and we've seen tons of assets that are great assets run by great people. I mean, you could apply that probably to dozens and dozens and dozens of stocks in this industry, because the whole industry is collapsing. What makes you selective of which company you're going to pick? Because you could say that, I mean, I can name, again, I'm going with this. Okay.
So Yeah, for sure. Like, so what separates it? Well, remember, it's got to be a world-class. So you kind of got to know what you're doing, right? You can't be an idiot and just say, well, look, the stock went up and went down. Now it's going sideways for a year. It's in the echo. No. Why did it go up? Why did it go down? And now why is it cheap? So let's use, we can use Altera as a perfect example, or Nevsun as our case study, and that doesn't really matter. They both apply to my boom, bust, and echo concept. You look at the deposit that, like the Timok in Serbia. This is a payback, Frank, of less than 10 months. Name me a mining project in the world that has a payback in less than 12 months. Those grades that they were hitting with copper are higher than what people send as a concentrate from their mine. Like, this is a truly world-class deposit. Like, that upper zone, that core, they were hitting 10% copper over huge intervals. They have a nice kicker of gold and zinc. The byproducts would make it a negative cash cost on the copper. Plus, you have infrastructure in the region. Remember, this is a mining district for the last 100 years. You have 40,000 people in this town that welcome miners. They are miners. It's in their DNA. It's not like it's like a Napa Valley where the Europeans want to just eat cheese. Like, no, these are miners, and the Serbians understand mining, and they respect the rule of law from foreigners. And people say, well, you're just a Serb. I go, actually, I'm not. I'm Croatian. And if a Croatian is telling you that, hey, like, this is a good area for business, if you understand the history between the Serbs and Croatians, it tells you how good of an investment decision it is there. Been there many times, never had any problems. So what I'm trying to get at is, here's a world-class asset that's going to be in the bottom tier of production costs in a world-class district with infrastructure. The Bor refinery is just like 40 kilometers away. You don't have to ship the stuff in the other parts of the world. You don't have to build a rail line. It's all there. You don't have to go through a jungle. And it's funny, like, guys like Robert Friedland promote Ivanhoe, which is in the jungle, and you got so many issues there. Like, I call it the AK-47 areas. And people will say, yeah, but Marin, Yugoslavia, there was more AK fighting going. Yeah, well, that was 25 years ago, and go there now. It's a great place to go. It's not a jungle where you have to worry about warlords. Okay, it's just not. So the asset in itself will justify that someone bigger will buy it out because they have to grow their business. So that's kind of the concept of the echo. With Altera, you look at these assets that they built, like, Frank, when we took you up to the Butte complex, this thing is a cash cow, and every year, once it's built, remember the generator when it was just spinning the run-of-river generator, and Ross goes, do you hear that? And we go, yeah. He goes, that's the sound of money. And that's when it hit me, like, these multi-generational assets that will just be clinking out cash for 50, 60, 70 years. And Altera built these deposits, and it got to the point where they were in their lowest cost quartile. They had big projects, like 300 megawatt sites, and it would be cheaper for a company to buy out Altera than for them to go and build it themselves. That's how I know that its true NAV is, look, if the market price is trading lower than its true NAV and you get all the upside for free, a major will buy it out if it's a world-class deposit. It's pretty simple. So that's what I look for in any position I take that I've taken a major position in the market.
No, it's pretty amazing too. And just to let everybody know, when it comes to alternative energy, right, you're seeing the subsidies and stuff like that, it's, a lot of people may not be too on board with that. But what we saw, and what changed my mind, even when you look at Altera, which I learned is the major cost for some of these things is building it, right? But once they're built, I mean, they're going to produce energy as long as the sun comes out, as long as there's wind blowing, and as long as there's water flowing, which creates a steady stream of income that's infinite, right? Am I saying that right? Because it's a matter of getting these sites up and running, and seeing that site where Ross Beatty and you was the first time I saw something that was fully operational, and seeing it, I mean, it was kind of incredible. I mean, you could correct me if I'm wrong on that, but it made me change my perspective of alternative energy.
That's why I coined it the infinite royalty, and Ross loved it. And now Interject's a bigger company, bought it out. And they like it because now their cost of capital goes even lower, and it worked out great for everybody. And I look at right now, Frank, like, one of the companies that I'm buying a big position in, I own now more than the president of the company, and that's okay because, he's got 5.5% of the company, and his cost base is higher than mine. And the reality is he's not made of money. He can't just keep buying stock. And I sat there like an alligator, did the site visit, knew the company. The first meeting the president ever had as when he joined the company was in my office. I've known the guy for 15 years. World-class people. They have a world-class asset. But it's in the echo phase, and everyone's given up. This is a stock that was over $3 just a few years ago on the same assets, and now I'm buying stock at a fraction of that price. It's in the echo. But let's go down to the deep core. It took me a long time to kind of learn the tricks of the trade or develop my models, but its true NAV is significantly higher than what is trading at the market cap, and that's not including any of the upside or the other assets in the company. And I believe that it will be bought out because of that reason. And I'm on a hot roll here because I have the right framework, the right kind of investment philosophy in the right market. Now there'll come a time when the consolidation phase will be digested through these companies, and then it's going to be about discoveries and coming up with new techniques. But we're not there yet. So it goes back to what's going to make gold go higher. I don't see that for the next 6 months. But you can still make doubles and triples, and I'm doing that with these companies by positioning yourself into what I believe are world-class assets and companies that will be buyout targets. And the beauty is, Frank, there's not that many out there. So it's not that hard if you know what you're doing.
And that's one of the projects that you're working on, right, Marin? I know that you're coming out. You don't really promote your newsletter often, but I know that you're looking to do that pretty much over the next couple of weeks. Are these the companies that you're talking about that you're actually putting money into? Because I know that you're one of the analysts out there, I am as well, where we invest in our opportunities. We don't just say things are going up 5,000% and just whatever happens, because a lot of outside firms, especially with, not ours, but they don't invest in their own ideas. They'll tell you it's going to go up 10,000%, but why they don't invest? They're not allowed to, right? So that doesn't make sense to me because if I really thought something's going to go up 10,000% and I'd invest in it first, right? Before, instead of giving it away for subscribers. So, but you actually put your money in positions and you're building these positions. Is it what you're talking about of what you're doing over the next couple of weeks?
So those are going to be like a freebie and my concept is like an investment diary. You get to do exactly at the prices that I'm buying myself. And I just say, look, if I say buy under $1, that's what I'm doing myself. Buy your first tranche. And I teach people how I buy. The biggest problem with people in the newsletter industry or consumers of the newsletter, because that's how I kind of started. Remember, I started out being kind of a ghostwriter for a bunch of big names in the industry. Then Doug Casey approached me, and then, I became his guy on the street. And what I found is people like a stock and they have 50 grand and they buy all 50 grand in one day. That's not how you do it. You got to buy in tranches. You got to be an alligator. And I have this whole philosophy about this. During the echo, you just sit back and it's like a discipline. It's like working out. You don't just say, I'm going to go run a race and sprint off you're not going to run a marathon by sprinting off the front line. Pace yourself. Get through the distance. It's all about, the markets are so cyclical, so they're so volatile. Don't rush. Be patient. Be cool. Be an alligator. But what I'm announcing in 3 weeks is my largest ever purchase in the open market. It's something that nobody is talking about. It's the first ever report of its kind published by any analyst in the industry. It's myself who's written and spent more time on this than any other project in my life because it is going to be a very large position of mine and my funds. It's called the Independence Royalties. It's the best royalty-paying company out there. Nobody knows about it. It's not some little dinky company that, pays out some pathetic interest because they have one or two royalty streams. Like, this is something that's flown under the radar. It's a game changer, and I just want people to know about it. Whether you buy it or not, I don't care, but I'm trying to educate people on what I'm doing because this is what I love. I'm trying to change the newsletter industry because I can't stand the way it's so cheesy and disrespected. Like, for example, when my in-laws or when people go, hey, Marin, what do you do? And you write a newsletter, people look down like, oh, what, you couldn't get a job at a real analyst firm? I'm like, get lost. I could run circles around the best analysts. I'm trying to bring the newsletter industry to a level that is respectable with a track record, and I'm using my own portfolio as proof of that. Unfortunately, there's too many dingbats and retards in our industry that are just corrupt. Hence why I run my own conference, and you'll only see guys who have skin in the game who speak at my conferences, guys like you. So I'm announcing that in 3 weeks, and with that report, you get the 2 other companies that I believe are going to be bought out by the year end, and you get to find out, do I really know my shtick, or am I just another talking head in the industry? I'm putting big money, like when I say big money, I'm saying over $10 million into these ideas because I truly believe in them.
Now, outside of those 2 ideas, the podcast, that I'm going to ask you this, even if it's not in the gold sector, but are there names that maybe on your watch list, things that you're looking at that are starting to look interesting to you? Because your person always shares names, and that's why you're one of my favorite guests on the show. And I know you have people knocking on your door, opportunities for financing and stuff like that. And I was just curious to what you're hearing out there, whether it's a sector or a few stock picks that maybe you could share.
What do I really like right now that I haven't bought any shares in is what you're saying. Look, I think one project, and look, I'm looking to buy a lot more stock. The last time I bought stock was a few years ago. I took you up there myself. We have a new president at Copper Mountain. He is going to be a guy that everyone should watch, Gil Clausen. And I think Copper Mountain over the next 3 to 5 years is going to surprise a lot of people. We're a producer, and I'm not trying to pitch a deal that, I got to be careful here. I'm a director, but I truly believe in it. Jimmy is retiring. Jimmy's one of my closest friends, colleagues. He's retiring. He's going to stay as chairman. We brought in Gil Clausen. Look at this guy's track record. He sold 2 companies that he's run in the last 5 years. No one else has done that. The guy's a rock star, and I'm sticking around to help him build Copper Mountain to the next level. Frank, one thing I like to do is really stick with the best people in the industry. The last time I bought a silver stock was 10 years ago, and it turned out to be a 10-bagger for us. I'm really interested about the silver space because I think some of these companies are entering its echo. 2 that I think people should pay attention to. One would be Pan American. I think that's really interesting right now. I haven't bought a single share. I'm hoping for a pullback. I'd be patient and be an alligator. The second is Silvercorp. That guy's balance sheet. Rui Feng is a rock star. Now, my wife's a geologist, and she's on the board. But this is a stock that I can see surprising a lot of people because it's had so much negative market attention from, you go watch the China Syndrome. They talk about, what Rui's doing. I think it's the most misunderstood company. And what both of those companies have going for it, which I found interesting, is a company that I financed 2 years ago, New Pacific, which has what I see is building up to be over 100 million ounce silver deposit in Bolivia. Believe it or not, Bolivia is super high risk, so probably won't recommend it to my subscribers because Bolivia is high risk. But Pan American has a major operation, and Silvercorp are 2 of the largest shareholders in that company. I did very well on it because the asset is turning out to be world class. So those are the 3 silver stocks that got me really interested. And it was funny, I was talking to my wife about it last night. The one benefit of having your wife as a geologist, we talk shop a lot. I'm not interested in sports, so that helps a lot that your wife is actually interested in what your main interest is. But anyways, the silver stocks kind of got me, piqued my interest. So that's something there on the horizon. The gold, I just think that gold is going to, I believe gold and silver are going to pull back here in the near term. I hope I'm wrong because then, my portfolio will do a lot better without much more work. But that's what I truly believe. So pick the best run management teams with the world-class assets. And Equinox is a perfect example. It's, something that I put almost, look, there's no secret. I'm top 5 shareholder. I bought all my stock at either $2 financing price or in the open market. It's run by Ross Beatty. These guys, Christian and Greg, they're going to build this thing on time and on budget, and it's going to spew cash. It's going to be a printing press for money. They have a world-class asset. They have a secondary world-class asset in the U.S. with Castle Mountain, and then, what they have in Brazil, which is going to be producing as their flagship property. But I think you can chill out and buy stock slowly, and in 3 to 5 years, these will be 5 to 10 baggers. I truly believe that. And something like Equinox, where Ross Beatty is publicly saying, I'm doing this to build another Pan American. Well, Pan American went from, 25 cents to $40, $50. It's $25 today. Stick with the winners, and when they're in the echo phase, remember, Robert Friedland, Ross Beatty, all of the biggest names, Lucas Lundin, they all go through that boom-bust echo if you study their histories. And you can make a fortune buying their echo. The problem with the industry is everyone gets excited during the boom, and then they get wiped out during the bust, and then they just wash out their shares during the echo. Stick to this concept, and you'll make a fortune.
All right, last question here might be the toughest. How long do you talk shop with your wife before she tells you to go change the diapers?
You know what? With the little ones running around, we don't actually even get time to talk shop until they're in bed. So, and most of the time she's probably not even paying attention. So I just keep talking.
Yeah, no, I hear you, man. I hear you because I've been there, pal. I've been there. They're a little bit older now. It gets even tougher as they're older. So, but no, that's really cool stuff. And listen, Marin, I love when you come on. You always give ideas. You tell it how it is. So I'm one of everyone's favorite guests on here, and I just want to let you know I really appreciate that, bud.
You bet. Thank you, Frank.
Okay, guys, like always, great stuff from Marin. The interview ran a little long. Marin did provide a lot of educational content. So we're going to end it here since it's running a little long, but I'll be sure to have a great educational segment for you next week. But a few notes before I go. First one is Nevsun. That was actually one of the many companies Marin mentioned over a month ago when he was on Wall Street Unplugged. You may have missed that pick, but we didn't miss it in our All-Star portfolio. Remember, guys, that's our new product. That was a stock we actually put in our portfolio. The All-Star portfolio, again, new product where we take one stock from each of my guests that I'm interviewing every week on the podcast. Almost every week. Sometimes we're going to have guests that, just aren't stock pickers. I don't know. But I'd say at least 3 a week. And sometimes these guests, mention a lot of names on the podcast. We'll take one and put it in there. But also they mention a lot of picks offline. So I'm always talking to my guests before and after the interviews. And you know what? During that time, we like sharing ideas and talking and about the family or whatever. But most of the time it's, hey, what are you seeing these days? What's going on? What are you looking at? And things like that. And I get a lot of ideas just by talking to them. I mean, I have access to these people every single week. I'm interviewing someone that's pretty amazing. So when it comes to All-Star portfolio, we put it at a price point where you could sample it by paying just $1, and that's a cost of 14 days. If you like it, it's $9.99 a month after. I know people say, well, Frank, it's cheap and this and that. Well, listen, I want people to have the same access that I have. And it's very important. Access to a huge network of hedge fund analysts, fund managers, market experts, newsletter writers, scientists, even billionaires who I've interviewed over the past 10 years on this podcast. When I look at some of these guests, I mean, there's money managers that I know that get paid in excess of $25,000 just for one of the ideas. I mean, that's what the hedge fund managers would pay, which is incredible. But you get access to all of this for just $9.99 a month, which is a pretty cool price. So we've seen the product in high demand from our list. We're going to start selling it to outside lists as well. When we do that, we are going to raise the price of this product. So, again, when we market to outside lists, we want to give you guys the best price at all times. But if you're interested in taking a look, there's a banner on our site right now, CurzioResearch.com. All you have to do is click it. You can read more about the All-Star portfolio. You can be subscribed for $1 for 14 days. If you hate it, hey, that's fine. If you like it, it's $9.99 a month, which is a pretty cool deal. And so far, we're seeing high demand. A lot of people have bought it for $1 and staying and subscribing to it long term because they're getting tons of new ideas, new picks, and we've gotten some amazing, amazing feedback for the product already. Again, if you're interested, that's cool. If not, no worries. But again, for this podcast, I know you guys are listening. You want more access. You want more things. I can't give away everything for free because I do hire people, and a lot of people put this production together and have people writing, helping on the analytical part and stuff like that. So we have to charge a little bit for it, but that's a pretty fair price for what you're getting for this newsletter, which can't be duplicated in the industry. There's no one that's going to give you access to this many people at all for even a higher price, but it's even more incredible that we're able to keep the price low just for you guys. Again, I'm probably going to raise this once we start marketing out to lists outside of you, and we appreciate everyone that subscribed to it. If you're interested, again, go to CurzioResearch.com and you could subscribe that way. Last thing here, I'm still doing my Frankly Speaking podcast, getting a ton of emails in, but it's on its own feed now. We took it off the Wall Street Unplugged feed. So you have to search for it, Frankly Speaking, in the podcast section on iTunes. And you're going to see it come up with an ugly picture of myself, which is why I do radio. Just hit the subscribe button, and you'll have access to it again for free. So I am getting a couple of emails. I should have mentioned that earlier. My apologies. So once again, Frankly Speaking, it's on its own feed, not the Wall Street Unplugged feed, but I'm still doing it, still answering your questions. Send them in at frank@curzioresearch.com. Love answering your questions, and that podcast has been doing very well. I'm just getting just as many downloads as Wall Street Unplugged, so I know you guys like it and great feedback and try to answer your questions that you're sending me through my frank@curzioresearch.com email. So again, just go on iTunes, click it, and you'll be able to subscribe to it for free. It'll automatically be sent to your phone, your computer, or whatever. You just have to go to that special feed, to that podcast, and it's its own separate feed now. So guys, that's it for me. Thanks so much for listening. I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.